time of the year where virtually every sector in India has a long list of demands for the finance minister, and the startup sector is no different. They also have a long list of demands. The industry has sought various tax SOPS in the upcoming union budget to further incentivize employment and funding to the world's third largest startup ecosystem. Now, these proposals range from making the deferment of the time of payment of tax on employee stock option plans to a reduction in the minimum alternate tax or MAT for eligible startups. Now, the move was aimed at addressing the onerous situation where employees of a startup became liable to pay a potentially large tax on shares received under an ESOP without realizing any profit. The deferment also aimed to address the issue of the startup having to deduct TDS or tax deducted at source, which usually amounted to much more than the cash salary of employee. Now, the industry believes that by deferment, this will be a huge incentive because ESOP is an excellent tool to attract talent and experienced candidates. Making the facility of deferring the point of taxation on sale of ESOP to a wider pool of startups, they say, will make ESOPs an attractive option to hire and retain talent and will provide a boost to the startup ecosystem in India. Now, what is the second ask? Now, they want the government to withdraw the amendment introduced in the Finance Act of 2022, which requires startups to explain the source of income of an investor. They say that this disincentivizes friends and family to lend money to startups. This will help in avoiding litigation and providing ease of compliance for the industry. So that's the second ask. What's the third ask? Well, the industry has also sought reduction in the minimum alternate tax for eligible startups to 9% from 15%. If you look at the MAT provisions currently, they have no threshold, and all companies, notwithstanding their size, are subject to the provisions of the tax. Therefore, startups are also liable to pay MAT even if they claim exemption under Section IAC of the IT Act. Now, the fourth ask. The industry has also suggested that the government amend the definition of eligible startup as provided in Section IAC to extend the period of incorporation for another 5 years to cover startups incorporated till April 1st, 2028. Currently, Explanation 2 to Section IAC provides the definition of eligible startups for the purpose of granting tax benefits. As per the definition, eligible startups refers to a company or limited liability partnership incorporated before April 1st, 2023. So, according to this, startups incorporated after April 1st, 2023 will not be eligible for tax benefits under the IT Act, which is why they have sought a change in this regard. Now, the other recommendation coming in from the startup industry is an amendment to allow an eligible startup to carry forward and set off losses if such losses have been incurred during the 10-year period beginning from the year in which a startup is incorporated. Now, current provisions allow an eligible startup to carry forward and set off losses if such losses have been incurred for 7 years beginning from the year in which the startup was incorporated. Finally, this is an important ask from many investors in the startup ecosystem. Many VCs have been asking for this, and this has to do with equalization of long-term capital gains tax for unlisted shares and public stock investments in the upcoming budget. This has been a long-standing demand of private equity and venture capital firms. If you look at the current tax provisions, they do not provide a level playing field to domestic investors vis-a-vis foreign investors. So, harmonizing tax rates for resident investors should incentivize domestic investors to invest in Indian startups. Now, finally, They've also recommended extending the date of transfer of residential property made by eligible startups under 54GB, which provides for exemption from capital gain on the transfer of residential property to eligible startup, and which is not available if the transfer of residential property is done on or after March 31st, 2022. So those were some of the asks coming in from the startup ecosystem to the finance minister. We will of course have to wait and see how much of these are accommodated. I think particularly the one on ESOPs, MAT, the harmonization of tax rates between listed, unlisted shares. Those are some of the things that the startup ecosystem will be closely watching out for. But how much of this will actually go through, we will find out on Feb 1st, 2023.